Hi, Larry Gaines, PowerCycleTrading.com. In this video, I want to show you a strategy, an option strategy that takes advantage of a kind of a spike or higher implied volatility, and also is a strategy that you can construct and design to pay you while you wait. So first off, though, let's take a look at the market. So we look here at the QQQ. You've seen we've had a big sell-off, right? So we're down here. It's about a 6% sell-off back here to the 50% retracement from that prior major swing low back in December. Okay, right here. And then we're at the 50% retracement. But so it was down 2.72% today, QQQ. But Microsoft, came down yesterday, hit through that 50, bounced, and today had a close that was higher than the prior day's low. So you can see the close here was higher than the prior day's low. So, that's a little bit of a positive sign there. And it's just hitting into that 50 simple moving average. So you want to look for potential stocks, put on your list as to those that might have the best relative strength to the rest of the market. And Microsoft is one that might hold up. Now, I'll be looking for it and see if we can get a push down maybe to 165, 160. But I want to be looking at that point in time at a buy strategy that could take advantage of the kind of the sharp rise in implied volatility. And one way to do that is using what we call a calendar diagonal option spread. So let me show you what that looks like. So first off, here's the option chain for Microsoft. So you can see here's the current option series for this week's expiration. And over here, this is the implied volatility. So you can see it's elevated in the front months. Normally, it's the other way around. Normally, you'll see, volatility higher in the back months because of the time, potential for things to happen. But now we've got that elevated volatility because of the virus. And you see here, we've got 57% implied volatility, 50, 44, 42, 39. So you can see this is kind of a backwardation kind of high implied volatility. So one strategy that takes advantage of this is one that where you buy a calendar. So we could come out, we could look, I'm not going to look at it quite yet, but I'm going to see if it pulls back. But here would be an example. So you could come to the April 17 series 52 days out, and let's say you bought the 170. Okay, so look here. So I'm going to put this on Delta Gamma Theta Vega, and you can see one thing that also is the advantage is you can see the theta decay back here, right here is only 7 cents. So we could buy the 170 strike for around 750, and then we could sell the closer in, like the 20 March, or let's do this the 13 March. You can see the implied volatility there is 44, and this is 35. So you've got 9 basis points higher volatility. Actually, 9 for if you sold this March series and you bought this back series right here, the 17 April. So what you look at, it's kind of like a call debit spread, but instead of buying this call debit spread in the same series or same month, you do this. You would buy the April 170, and then we want to sell the 175. So we try to sell that here in this month right there. We could do this spread for $4.55. That's the max debit paid. And you can see the implied volatility is higher, 44%. So we get that benefit of selling volatility versus the lower implied volatility back here of 35. And then we can also get the benefit of theta decay from being short this strike here, the 175. You can see it's a theta of 13 cents a day versus the long dated back here at 170 is a theta of 7. So this is a great little strategy once you think the market has bottomed, and then you can ride it for the income to the upside, or if it stalls and churns sideways, the other way to play it is you just play it like a covered call. You just buy back in your short strike, the 175, and then roll it to the next series, to the next series, to the next series. So it's a really great strategy, and especially when you have a higher implied volatility market and you think something's starting to bottom out and stabilize. Hope this helps. And if you'd like to learn more about this strategy, join me this Saturday, and I'll be going over a lot of different types of selling option strategies at a free webinar. So I hope to see you there.